Stay tuned for this episode with Fuquan Bilal when he talks about his history of getting through the financial crisis of 2008, how he ended up becoming the bank, what he learned from his son to make that business successful, and how he helps investors today diversify even during the pandemic, paying them out every month. You're not going to want to miss this. Today's show is sponsored by the Airbnb Kickstart course. My wife and I started our first Airbnb here in the last year, and we've come to love the ability to earn more money than we would if we had a long-term rental. If you're interested in starting your Airbnb business with little money, scaling your Airbnb business, or just learning tricks about the industry in general, check out our Airbnb course at nextlevelincome.com/Airbnb. That's AIR, the letters BNB, and you'll get a 20% discount code. Welcome to the Next Level Income Show, where it's our goal to raise your income, your investments, and your life to the next level. I'm Chris Larsen. You can get a free copy of our book at nextlevelincome.com. Just click on the book link. On today's show, we have Fuquan Bilal. Fuquan is a real estate investor with over 21 years of broad experience. His financial acumen, proprietary set of investment criteria, enable his company to purchase underperforming real estate assets at a deep discount, both face and market values, thereby increasing the value of these assets. This, coupled with his ability to maximize the use of leverage, enables him to build strong secured portfolios with solid passive income flows. Fuquan effectively hedges investors' risk by spreading their investment across the portfolio of alternative assets that diversify and stabilize the fund's return and valuation. Fuquan, welcome to the show.
Thanks for having me, man. I appreciate it.
Oh man, I'm fired up. So I know this is coming out and people don't know this, but this is right before the 4th of July holiday. We're talking about our plans for the weekend, and just talking to you puts a smile on my face, kind of going back with some of our history. Had a great time being a guest on your podcast. I'm really excited to share your story and what you have going on with our audience. But Fuquan, for people that don't know you as well as I do, please go ahead and share with the audience a little bit about your background and how you ended up where you are today.
Yeah, so basically, I've been in sales all my life from when I was a kid. I mean, my mom used to take us out to the bazaars and flea markets and to get stuff wholesale from Chinatown, New York, and towards entrepreneurship at a very young age. From 11 years old, I had the opportunity to bring income in my family by helping my mom, go to these places, and that kind of inspired me as an independent thinker to always want to do something on my own and have my own business. You see some kids with the lemonade stand when you're driving down your street. I just love that entrepreneur spirit. So, through that process, it really got me into being into sales. And that's one thing that I wanted to do. I didn't know if it was going to be real estate. I got a job with a telemarketing company, and that morphed into being a director of sales on the West Coast for years. And then that transferred to being a director of sales for a computer technology company that did microchip level, also microchip repair level repairs. Repairs down to, they call it the field replaceable units, whatever it was, repairing microchips. And I was really good at that. And at the time, my cousin was doing real estate, and I was probably like maybe, 23, 24 years old at the time, making great money, $80,000 a year. What any kid dream of at that age, having that much money. But I was able to make it through the ranks of corporate at that young age and bring my sales skills to the table, and the owners appreciated that. But my cousin actually was doing real estate, and he did a deal in 6 months that made half my salary. And I was like, 2 months actually, that made half my salary, and $40,000. So I was like, wow, he made 6 months of my salary in 2 months. He was about it and everything else. So I started to shadow him and learned the real estate business that way. At the same time, my older brother, he was a loan officer, and he was trying to get me out of the corporate world from getting the set, comfortable paycheck every 2 weeks into doing loans, mortgage loan origination. I was like, I don't want to do that. You got to wait to get paid. But being between both of those guys and seeing how the real estate world was evolving, this was back like 96, 98. I took the leap of faith in 99 and gave my tooth notice in and started my real estate journey from there. And I did fix and flips all the way to the market crash, and then became a landlord because the banks would not lend or do anything at that time. So you were forced to be a landlord. And the areas where I was investing in was the areas where I come from, low income areas. And, it's not good to try to ride around in those areas and collect rent. There was no Appfolio back then. There was you had to knock on the door and collect rent or get it in the mail. So, I mean, through those trials and tribulations, the inventory that I had, I was able to fire sell some of the stuff, pay off for my investors. I didn't have to file bankruptcy. In fact, I still have a relationship with a lot of those investors from day one. And then I kind of learned the note business during that time, right? Because it was during that time, anything on the market can be listed cheaper than what you would get in a short sale. So I started learning note business, and that's where my story began, with learning notes. And after I built mastery in that, I opened up my first fund in 2013, and the rest is history from there.
Yeah, and that's how we got connected. I talk about in my book how we invested in notes, and that was with you. You taught me so much. I went through your program that you had at the time, and I remember sitting there. I was on vacation in Charleston, South Carolina, sitting there with all my note portfolios spread out all over the table, going through all that stuff as we were looking at all the different investment options that there were. And it impressed me with your knowledge and the system that you put in place. And I think that's really key. So maybe you could share a little bit with the audience some of the systems that you've used and how you've automated a lot of these processes to really help you get success. Because I remember what appealed to me was that you were telling me your returns were so big, you actually had to tone down your returns when you advertised to investors because people couldn't believe how much money you were making them.
Absolutely. Yeah, it was weird, right? And I've learned that with raising capital. When the more return, the bigger the risk, right? You tell people you're making 20% returns, they're like, that has to be a risky investment. It's something wrong with that. If you say, it's 6%, they're all over it. And I couldn't understand that. I wanted to brag about the returns I was making, but when people don't understand the industry, then they can't connect, with the understanding of how it works. So the system, going back to your first point, I've learned that, if you do a business, you want to set it up like a franchise so you can scale. And you always want to scale to be better instead of bigger. A lot of people put systems in place so they can make more money, forget about the efficiency. So that's one of the things that I wanted to bring to the note business is how do I become more efficient? And with the industry that I was in, which was second mortgages, we were in a niche market buying second mortgages, and that's a real business. You spend $1 million on some notes, you're going to get 300-400 files versus if you're buying first mortgages, you may get 10 files. So you have to build up a system and process to execute on collection, to execute on borrower management, and that's just one part of the business. So you have to be raising money, you have to have the resources to buy, and then you have to have this be able to scale. Scalability has to be in place. So in order to do all three of those things, you need a process and a system. So I reached out to a few of my board of advisors at the time and try to figure out what was some of the things they were doing successful in their business, and they just kept saying it's people, processes, and systems. When you can perfect that, nothing can stop you. So I did my homework and started to put that stuff into place. And when I created the education, it was more of a gift, right? Because if you look at the way I structured it, I would sell the notes and then train you and reverse engineer it to show you how I came up with the price to pay for it. And then I had everybody on the call because some people were like, hey, how do I know you sold me something good? Well, you're going to be on the call for 3 months. Whatever happened during that 3 months come to the light. So I wasn't afraid to kind of show us under the hood and teach people about how to do it, because it made me sharper, a better person, and it can make better connections with people. So that was how we did that with the process and system. That's important in anything you do. You can't.
That's huge.
You can't. It's huge, man. I just actually took my company through the EOS model, the entrepreneur operating system model, and that's very important. Learning how to dissect the rocks and do the deliverables, and having your weekly level 10 meetings with your team, having your quarterly is where you get the chance to work on a business instead of in the business. We just had one yesterday for Q3. So that's helps you level up all the time. Staying ahead, planning, learning how to pivot and everything else.
Absolutely. Yeah. I take all my coaching clients the same way I used to take my sales team through this. And, sales is all about results, right? Being a business owner is all about results. And I coach them through that process, that weekly cadence, those quarterly goals. And we're coming up here at the beginning of the quarter. It's middle of the year today. Happy middle of the year. But I explain to them how important it is to stay on top of those things. So, those systems and those metrics are super, super important.
They're everything, man.
Yeah,
Everything.
absolutely. You talked about the educational piece. I was fortunate enough to do a little blurb in the book that you wrote. So tell the audience a little bit about why you wrote your first book, and it's kind of some of your subsequent stuff since then.
For sure. So the first book was Turning Distress into Success. And I was so excited when I learned the business. And one of the things, actually, I was inspired by my, at the time, 8-year-old son, because I short sales for a little while after the market crashed before I got into the notes. And what got me into the notes is I was on the phone with a negotiator, and he was like, why don't you just buy it? Why don't you just buy it? How do you do that? So he kind of walked me through the steps, and I learned. I had a mentor who taught me. But the raising capital thing was my 8-year-old son at the time, when I was going back and forth the bank. He said, why don't you just become your own bank? And I was like, you can't do that. And he said, well, Dad, you said anything is possible. And I mentioned that in the book too. And I was like, oh, wow, I did say that. Now I got to do it. So I began to learn how to run a fund and open it up and raise capital and everything else. Hired an SEC attorney from 2013 that I still use today. I learned a ton from this guy. And basically that kind of opened my mind up. And that inspired me to write the book, because when I started to raise capital for debt and I started to be able to manage 1,000 loans, right? We did a trade where we purchased 1,000 loans.
Yep.
And I saw the opportunities in this 1,000 loan package. There was auto loans. There was 600 of the loans were second mortgages, but the rest of them broke up into auto loans, unsecured a line of credit that people go take from the bank, business, personal. Also, when people accounts go into zero and non-sufficient funds or whatever, they have thousands of dollars upside for writing bad checks. Those go into collection as well. And the bank said, as I never knew that. It was credit card. There was a whole bunch of stuff in there. It was 30 million of debt that we purchased. Yeah, 30 million of debt, 30 million of unpaid balance. So when I got that and started working through that, I'm like, wow, is this what you can buy debt on? There's people who sell boat loans. People finance boats. They go into default. People finance cars. They go into default. So that inspired me to write the book, to let people know that you can turn a distress situation into a success. You can share your discount with people and help them. Like for us, it's homeowners. When we buy a note and we buy it at a discount, we share our discount with them. We want to keep them in the house. We don't foreclose on it. We will if we have to, but our model, foreclosures, you fail, because the goal is to keep them in the house, let them be the property manager. We collect the payment passively. But that's what inspired me to write the first book, because I learned how to navigate through the debt collection business. And I wanted to share that with the world. Like, hey guys, it's not only about real estate debt. You got car loans, you got boats, you got all this type of stuff, right? I never understood before that. Why would somebody buy a credit card? They're not paying Amex, why would they pay you? But I had to learn that, okay, they owe Amex 50,000, Amex book charges, they're going to sell the debt to you for 5,000. You can go to the person and say, hey, pay me 10,000, we're all done. Give me 7,500, we're all done. The person's going to do that from 50,000.
Yeah.
So, that gets the wheels spinning a little bit. Now you kind of understand why and how it works. So I wanted to share that with the world in the first book. My second book was called The Tire Kicker. It's actually a pamphlet. A buddy of mine always joked and said, dude, it's only like 60 pages. It's not a book. It's a pamphlet. Cut it out. It's called The Tire Kicker.
That's like my book. I felt like it came out 50 pages and then you publish it. It's like, oh, it's actually 100 pages. But people love it because they're like, dude, your book, I could read it. I read it in one sitting. I read it on a weekend. I read it on the flight. And I'm an engineer. So I'm like, I'm not a good writer. I just like to get a point across.
Get the point across. So I wrote The Tire Kicker.
A pamphlet. I love that.
That was something that I was trying to do at the time. I was going to like the Dale Carnegie and all the other stuff I was listening to. And I was like, you know what? I need to summarize some of the stuff I learned and I put into action and share, with my audience and people, what I call the tire kicker, because I would go to these seminars all the time and I was doing education, but people just not taking action. And I was like, all of us have a tire kicker. All of us procrastinate. Right. Sure. But I wanted to share some of my procrastination stories and how I got over it, how I overcame from being a tire kicker. How to beat the mind game and seize the results you want is the subtitle. So I wrote that book, The Tire Kicker. It's a really good book. It's on Amazon also. And then my third and last book is Passion for Real Estate Investments, which I actually have a podcast, PFREI. In that book, I just talk about the different real estate investment asset classes I invest in, what you can do from IRA and different things related for real estate and why I have a passion for real estate. But yeah, those are the 3 books that I wrote.
Yeah.
That I've written.
Oh no, and they're all great. So we'll put all those in the show notes too. I highly recommend checking out Fuquan's books. And that's the thing. Like one of the things I had this conversation on the last podcast I recorded, and I just had this conversation yesterday. There's the abundance mindset and there's the scarcity mindset. And part of the abundance mindset, I've learned this. Like when you don't want to share things with people, you're afraid, right? You're afraid that they might pick up what you're doing or steal, your idea or steal, the deal that you have. But the reality is, and this, Fuquan, so many people are tire kickers and they just don't take action. And it's the massive action is like I love Tony Robbins says, take massive action. You can have the vision, you can read The Secret and visualize and have your vision board and everything that you want. But if you aren't taking massive action, you're not doing it.
Go nowhere.
Yeah, that's right. And, again, I think, when you take that mindset and you share with people, but they ultimately have to do that. They have to do that. So you just talked a little bit about, your passion for real estate. We talked about on your show, all the different types of real estate that you share. Talk about a little bit how your business has evolved, Fuquan. We talked about the notes. What are you doing today in your business? How are you working with investors today?
Yeah, great question. I started off doing fix and flips and then became a landlord and then morphed into the note business. And when I got into the note business, that was my one thing for years. I wanted to build mastery in it. The fund in 2013. And by the time I got to the 4th fund, I was winding up the 3rd fund, paying all the investors back, opening up another fund. It was 2019 this time, December. And I'm like, wow, well, we strategized a little bit before that. It was like, wow, we need to pivot. The market has been great for a very long time. Something's coming. We don't know what. We've been punched in the face before, Fuquan. What are you going to do? How are you going to pivot? So for my personal deals outside the fund, I do real estate because the fund was all notes, right? Yeah. So I would do real estate and I would raise money from people who was not accredited, maybe had IRA money or whatever, the small amounts, 100,000, 50,000. To put on these deals that I was flipping and giving them a passive return. And I started out of inventory. So I was like, wow, and sometimes people with IRA money don't come through. They say they want to fund it. And then when it's time to close, they're not ready. So I came with the idea to put all of it into one fund. So I consulted with my accountant. I consulted with my SEC attorney. They said it's actually a great idea to create one vehicle that you can do all these different strategies from. And I've learned that it plays as a buffer or a hedge against market uncertainty. So once we came up with the idea, we ran a press county and the SEC attorney and counsel, we executed on a plan. We created a PPM. We started off with a small PPM of 15 million. And that was to buy smaller multifamily units for rentals, maybe anywhere between 70 doors to 100 doors. I'm using financing as well. I'm still buying notes, but 60% of the capital used would be to purchase real estate. So if we can leverage the institutional financing and put down to 25% from money we raise in the fund, we can also use some of the money in the fund to do fix and flips in the areas where I've been at for the last 21 years. And we can also use about 40% of the money from the fund to continue the note business. Because notes is ordinary income. Now we get the depreciation from the rentals to offset that, which shows up on the K1s and everything else. So it was a great mixture. We launched that strategy in December of 2019, and then we had COVID. Yeah. So because 85%,
which I think is a great time. Like, what a great time to launch the fund. I mean, tough, but what a great time to launch the fund.
Yeah, it was weird because we were like, okay, we're going to launch this fund. We started promoting it, and then boom, COVID hit, and we go, wow. At that time, I probably raised, I don't know, close to like 3 million out of the 15. And then COVID came and everything just shut down and didn't open back up until like June.
Yeah.
So we had a whole, 3-4 months where there was nothing happening. Yeah. And the beauty of it, though, 85% of our rental portfolio is covered with second tenants. So we had consistent payments from those government paying tenants, and that helped carry us through. And even in fact, helped us make a 10% net return end of 2020, where a lot of people struggled.
Yeah, it was a tough year.
Didn't know what to do. Yeah, it was tough for a lot of operators, but we continued to pay our investors, which was great because of the mixture we had. Now, the notes we had in the portfolio, yes, some of them went delinquent, people stopped paying. We did everything we could to jump ahead of the curve, defer payment, put out fires there. But it was such a beauty that we had the rents in there to be able to carry that over. So, and then we continue to do repairs on the fix and flip stuff. So once we came out of that, we were able to liquidate some of that stuff. Now the market is crazy.
Yeah.
We're getting way more than we anticipated. And the repairs that we did at that time, we didn't have high material costs, because during COVID, that didn't happen until, 4 or 5 months ago, and things started to go out of control. But that's what we're doing. Our strategy is a diverse strategy, is a hybrid model with real estate and notes. And the notes allow us to a few income streams from discounted payoffs, reperforming loans. We sell loans. That's not in our footprint when we take down the tape, the fixed income and the rental income. So that's our strategy today.
No, I love it. And, as we build out our offerings for our investors, we have our multifamily, we have our self-storage funds, mobile home deals, different stuff. I love how you give your investors that option. We were talking about a deal last time we were chatting, Fuquan, and you were telling me you bought it for some ridiculous amount.
95 unit.
Yeah. So tell me, you got to share that with the audience.
I'm flying out next week to go meet the architect and some other place. But this was November. So as we pivoted and we started looking at different types of things to invest in, I was like, man, I want to get more distress. I kind of want to doing
more distress. More distress. I love this. So listen. So if you're listening, I want you to listen to this. And this is what I love. I love how there are opportunities in every area of real estate. And, we just bought a 354 luxury Class A property, but listen to this deal. Yeah,
for sure. So I wanted to get into more distress. And first of all, our goal is impact projects, right? So I come from Newark, New Jersey, low income areas. So it gives me the feeling of importance to be able to go back to these communities, revitalize them, put the properties back on the tax roll, give the residents a better place to live. That is what gets me up in the morning. Yeah. So I'm doing that already local where I'm at. So I'm figuring out where else can we do that. So we looked at areas like Tennessee, Alabama, Ohio, right? Those have distressed areas, right? So we looked at the marketplace there and say, how can we force appreciation? We could go in, we can help the community, we can buy undervalued assets that no one wants to go in and touch, right? Chris won't be over here, so let me go look over here. Chris not looking over here. So
I don't like to get my fingers dirty, It's like,
Chris is in California and everything else. So I'm just kidding. But we go look at these distressed areas because it allows us to impact project and force appreciation. But we got 95 units for $800,000, right? 800,000. Now I got it during the time of the holidays. I always do look for properties during Christmas, during Thanksgiving, during any New Year's, any major holiday. Why? Because everybody's partying, everybody's celebrating. And I'm out looking for deals, flying around town, negotiating while everybody's sleeping on the job. So we found this because of that, because nobody was paying attention. And the broker brought it to me and we went out. I flew out immediately, spent 3 days out there, walked every unit, did the due diligence. I had some of my guys look at the stuff, put some numbers together, made the offer. And I made an offer that, I didn't think they would accept. And it was pretty much lower than where I was at 650. And they're like, we got to get close to like 900. So we ended up around 800,000 and we wrapped it up. It took us a little bit long to wrap it up. The title company, Alabama, just moved slow. The town, COVID, it was a whole bunch of stuff. Anybody who purchased anything between January, February, or whatever, it took us literally 4 or 5, almost 5 months to close this deal. It was unbelievable. Yeah. But we got it done, and I'm a proud owner of 95 units for 800,000. The list about 27,000 a door. Once we're all in at 4 million, the value is 6.5 million when we're done, based off the current rent market. It'll probably take us a year to put this thing together. I'm pretty sure rents will be higher. So we're pretty excited about this. It's something I'm looking forward to doing more in the fund.
Yeah, no, I love it, man. And I love your background and how, you're taking that and you talk about how with the Section 8, it helps you float you through, and your investors benefited from it last year during the pandemic. So, we both had very different upbringings and kind of where we both are in life today. And I'm always looking for ways to teach. I have 2 boys as well. We've talked about our kids. Mine are a little bit behind yours. But I guess share some of the things that you're doing to help involve your kids in the business, help see some things. Your son already provided you with some ideas with being the own bank. And I always tell stories because I'm like, if I can break it down to my son, I'm like, all right, you need to make money, you need to keep money, and then you need to grow your money. And then I'm like, oh, that's a good idea for my book. And that's how I came up with the strategy. I tell my boys, they're like, well, how do you make money? I said, well, you help people. And that's, if you can help a bunch of people, then that's what Zig Ziglar said, right? You can live the life of your dreams.
Yeah, I like that. I'm actually writing that down. Make money, keep money, grow money. I like that.
Yeah. So, and it's just, it's evolved. It's simple, but I figure if you can teach it to kids, then it's easy to grasp. So, what are some things that you're doing with your boys, Fuquan, to help teach them about what you do and, how they can, go out into the world and make a difference and also make money?
Yeah, for me, it was earlier on. I was divorced in 2010 after the market crash and everything else, and having financial issues. Then there's the stress with the marriage and everything else. So,
yeah.
I got divorced in 2010. I got custody of my boys, and they kind of just roll with me, and that was the best thing that actually happened to me. I still have a great relationship with my former wife, but it kind of really made me see the reality of what I was doing. Because at the time, I was a slave of the money instead of master of it. I was chasing it, and I never had time for my kids. When my former wife used to say, let's go walk in the park and push your stroller, I'm like, I'm busy. So I never really focused on them until I was around 2010, late 2009, when I got custody of them. They was my one thing in my in-law. So I brought them everywhere that I went, right? So I was doing a landlord thing and I was going around and the low-income areas collecting rents. Yeah. They would see me come in and do my ledgers and be in the car counting money, and they were curious. My 8-year-old at the time was like, what's that about? Like, what you doing here? So I started explaining to him during that time and educating him how I make money from rental income. And it's just through that evolution over years, they've been listening to my calls, listening to my meetings, coming out to the construction parties with me. Even when I was doing notes and I was doing the education, they would listen in, and they just picked up a few things as they came along. So then when it came time to them wanting to play, like every kid's got video games, they want to buy games and everything else. I said, well, don't tell me you need money. Ask me how you can earn money, right?
Love
you
it.
can buy what you want, because if you ask me to pay for it, I'm going to say, no, I don't want to do that, or you can't have this. But if you're buying it, you can buy whatever you want. Really? Great. So this is how you learn money. So they started doing small jobs. And one of the things that really helped accelerate it was when I started, because I do a lot of recording of the construction and the process I do when I go to the sites and check with the site managers, because that's the way for me to get my investor updates. People want to see, I give you money, let me see what happened to this money. So I would record it and put it on YouTube and send it to them or whatever. So I started to hire my kids to actually come around and record this. And organically through them recording and me talking to the contractors, me negotiating deals, me doing this over the years, they picked it up. It was another way for me to add them to the payroll to put money into the IRA account as well.
Oh, it's great, right? Yeah.
Then I started teaching them about the IRA, because they was like, well, why are you putting my money in this account? Why can I have money? Well, you need to create a retirement account. What is that for? Well, let me show you what it's for. Now let me show you how you can leverage it. Now, let me show you what it's for. You paycheck, no taxes are being taken out now because you're underage, but they would take about 15% of your money. You went out and worked hard. Now they're your partner. What? Why do you got to have my money? Well, if you put it in a Roth IRA, then all that money is yours, but you need to learn how to grow it. So now let's look at other trusted advisors that we can leverage, people in the business that I know that we can invest into, right? This guy is doing good. He's a loan for a property. Now we can combine our IRAs and do a lending deal. These are some of the things that I've taught my kids, now putting the deal together and the paperwork together. Right. Yeah. So then I say, okay, now would you rather go manage a construction project or would you rather manage paperwork? Which one you do? The paperwork.
Yeah.
All right.
That's right. Like Chris, I don't want to get my fingers dirty. Well, I mean, no, it's fantastic. And I tell people the story, like my stepfather, he'd take me around to the rentals. And I mean, I shoveled shingles. I dug holes with my uncle. I laid wood floors. I swung a hammer, took out, did all these things. And I realized, like, that's not really what I want to do when I get older, because you look and you see people and they're hobbling around and they're like, oh man, son, don't do this when you get older. They're smoking a cigarette. They don't have their license because they got a DUI. My dad had to pick them up. And I'm like, man, this is rough. Right. And there's better things to do. And I learned a lot by seeing those things. And in turn, what we do with my boys is very similar. We have short-term rentals. And they clean them, they manage them, And then that money goes into their IRA, and we look at their IRA statements at the end of the month, and we compare it to their dollar a day allowance that they get if they're good boys and they do their chores around the house. And they're like, Dad, I made 3 times this month in my investment account than I did from my allowance. I'm like, well, which one did you work harder for? And it's a pretty powerful lesson, right? So I absolutely love
reality.
it. So Fuquan, if people want to get your books, if they want to check out your podcast, if they want to learn more about your fund that you have, what's the best way for listeners to get a hold of you?
Sure, to get in contact with me, you just go to my site, nncapitalfund.com. The book's all on Amazon. You just go to Amazon and type my name in, Fuquan Bilal. If you want to see some of the renovation projects I do, I have a show called Walk Through with Fuquan on YouTube, and I have a podcast. It's Passion for Real Estate Investment. We have a YouTube channel, and we're all the podcast stations as well.
That's Passion for Real Estate Investment. And we're going to link all that in the show notes. Fuquan, I've loved having you on. I always enjoy our conversations, your energy, sharing stories about our kids. But before I let you go, if you can go back and give your 25-year-old self one piece of advice, what would it be?
Oh, man, it would be to get into a mastermind earlier. That's what it would be. That's the one thing I believe that has helped me leveled up. I'm 4 different mastermind now. One of them is just all about personal vision, has nothing to do with business. That balances everything out. And the other ones are, just being connected with great people to kind of level you up. So it would be definitely to get into a mastermind and connect with higher people at an earlier stage.
I love it. I love it. As soon as I joined our first mastermind group, my wife and I, that led to you. It led to the multifamily industry. It led to all these amazing opportunities. And I think it's just amazing, the people you can meet and the connections, and that's what it's all about. So thank you for connecting with our audience today, Fuquan.
Sure.
I wish you a happy 4th of July, probably a little bit before this podcast is released here. And hope you enjoy the time. Safe, happy weekend with your boys.
Same to you, man. Enjoy.
All right, my friend.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.